Welcome back to TechKidFX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording is holding below the 20-day MA here on the 4-hour chart, which is now acting as resistance. We are also trying to battle out a key significant high at around the $0.5 mark, and the moment we manage to break above that, then we can continue unlocking even higher prices and continue breaking through these other highs over here. We have also continued to obey the Elliot structures, where we had been seeing a bit of a breakdown to the lower side in the formation of this wave 2 in a move that has managed to get into the minimum retracement area, which lies between the $0.35725 mark and the $0.028163 mark. And I now believe we have bottomed out in the formation of that wave 2, and whatever we are seeing at the moment is the start of this massive run up to the upside in the formation of this wave 3, and all this is playing out after we fully peaked in the formation of this larger Elliott wave count 1, giving us a peak at around the $0.67 mark, which also played out after seeing this 1-2 setup to the upper side. And before I get further into the technical analysis to give you the short-term scenarios and also sketch out my target areas to the upper side in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to first sketch out a target area to the upper side in the formation of this wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.32246 mark, and that is the minimum that I'm expecting that wave 3 to the upper side to do. And because of the impulsive nature in the formation of that wave 3, I'm also expecting to see another 5 wave structure in formation within the formation of that wave 3, having the wave 5 fully maximizing our target areas and also giving us the high for that wave 3 to the upper side. And this Elliott wave structure, which is a micro Elliott wave count within the formation of this wave 3, is what is going to give me the short-term scenarios that I'm expecting to play out, and I believe that is better seen here on the 1-hour chart. And here on the 1-hour chart, you can see that after seeing our low in the formation of this wave 2, we started this massive run up to the upper side obeying the Elliott wave structures, which is a micro Elliott wave count within the formation of that wave 3, having that as the first wave. Then we have seen a corrective structure in the formation of this wave 2, and I believe that whatever we are seeing at the moment is the start of an impulsive wave to the upside in the formation of this wave 3. And in the formation of this wave 3, which is also an impulsive wave, I'm also expecting to see another 5 wave structure in formation within the formation of that wave 3, and I believe we are seeing such a scenario over here in this Elliott wave structure in blue, having that as the first wave. Then we have seen a corrective structure in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, I was able to come up with a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.78, which is a target area that lies between the $0.5 mark and the $0.45273 mark, and that is the minimum that I was expecting this second wave to the lower side to do. And in yesterday's breakdown, you can see that we fully maximized that target area, and that gives rise to the formation of this wave 3, since we have fully maximized our target area in the formation of this wave 2, and now sketching out target areas to the upper side in the formation of this wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a minimum target area to the upside in the formation of this wave 3 at the fib level 1.618, and that is at around the $0.73485 mark, and that is the minimum that I'm expecting AGIX to do next year in the formation of this wave 3. And for that move to also play out, you need to continue holding above the 20-day MAs and also see a break above our significant high at around the $0.5 mark. Then from there we can fully maximize our target areas, and that is what I'm expecting here on the short-term scenarios. So continue watching our significant high at around the $0.5 mark, and the moment you manage to break above that, then continue watching these highs at around the $0.53179 mark and the $0.59146 mark, because a break above those highs also would trigger even higher prices to fully maximize our target areas. And also taking a look at the indicators On the RSI, we are trading at around the 60 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the MACD, we have been able to print a bullish cross, and we're also seeing a massive increase in the buying momentum, suggesting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.